Hello everyone, welcome back to the channel. Today we've got a big one. Seriously, we're diving into the latest earnings from the Singapore Exchange Group, SGX. So why is this such a big deal? Well, they just posted their highest revenue and net profit ever since listing. And for us dividend investors, this is the good part, they've announced a pretty juicy dividend hike and laid out a clear plan to keep on raising it for the next 3 years. So the big question is this a sign of great things to come for SGX or just a fluke? We're going to get into all of it, the good, the great, and what it all means for you. Let's do this. All right, before we get into the nitty-gritty, you know the drill. A quick disclaimer. This video is for informational purposes only and is not financial advice. Please always do your own research or consult with a licensed financial advisor before making any investment decisions. Okay, let's jump in. So let's start with the basics. What exactly is SGX? Now, most of us know them as the Singapore stock market, right? The place you go to buy shares in companies like DBS or Singapore Airlines. But that's really just the tip of the iceberg. Where they really make their money is in being a multi-asset exchange. Think of them as a massive financial supermarket. They're not just selling stocks. They're huge in derivatives, which are tools for managing risk on things like Chinese stocks or even the price of iron ore. They're also big in foreign exchange and fixed income. And let's be honest, the market right now is, well, it's complicated. You've got geopolitical tensions, crazy volatility, and money flying all over the globe. SGX sits right in the middle of all that action, which makes their results a fantastic indicator of what's happening in the Asian financial world. Okay, let's talk numbers, the headline figures. And wow, they are pretty impressive. First up, revenue. SGX brought in a massive 1.3 billion Singapore dollars in net revenue for their 2025 fiscal year. That's an 11.7% jump from last year, and it's the highest revenue they have ever recorded. Okay, so revenue is great, but what about profit? Their adjusted net profit, which is the number we really care about because it shows the core health of the business, hit $610 million. That's a 16% increase year over year. That's fantastic growth. This all boils down to an adjusted earnings per share of 57 cents, a big step up from 49 cents last year. But honestly, here's the part that got me really excited: the dividend. They've proposed a final quarterly dividend of 10.5 cents per share. That's a nearly 17% hike compared to the same time last year. For a big, stable company like this, that's huge. This brings their total dividend for the whole year to 37.5 cents. So where did all this money come from? Was it just one lucky segment? Not at all. And this is why their strategy is so interesting. The growth was really broad-based. First, let's look at their bread and butter, regular stock trading. Revenue from this part of the business jumped by $62 million. Basically, it just means people were trading a lot more stocks, almost 27% more to be exact. Next up, derivatives. Revenue here grew by $44 million. This was mainly thanks to huge interest in their products that track Chinese and Indian stock markets. Investors all over the world use these tools to manage their risk in those big, fast-moving economies. But the real star of the show was their FICC division. That stands for Fixed Income, Currencies, and Commodities. Their over-the-counter FX business is absolutely crushing it. The average amount they handle every single day soared to 143 billion US dollars. And their currency derivatives volumes, they exploded, jumping by almost 55%. This just proves that their big plan to be more than just a stock market is working. It's working really, really well. So how did they do compared to what everyone was expecting? Well, SGX has been guiding for a medium-term revenue growth of about 6 to 8%. This year,
They delivered nearly 14% growth, excluding treasury income. They didn't just meet their goal, they blew it out of the water. This tells you that management isn't just talking the talk, they are executing flawlessly. And on that note, let's see what the man in charge, CEO Lo Buon-chi, had to say about it. He called it a landmark year for SGX Group and pointed to the enduring strength and resilience of our diversified multi-asset strategy. He's making it clear that this wasn't just luck. It was the result of their long-term plan to diversify the business. He also specifically pointed out their FX business, saying it's now one of the top 3 in the world among exchanges, with room to grow further. That's a huge vote of confidence in where their future growth is coming from. Okay, this brings us to the most exciting part for long-term investors. What's next? What's the plan? First, they're sticking to their 6 to 8% annual revenue growth target, which now seems very achievable. They're also planning to spend between $90 to $95 million next year on upgrading their technology. This is just smart business. You have to reinvest to stay ahead of the game. But now for the main event, the dividend guidance. This is one of the most shareholder-friendly plans I've seen in a long time. Management has stated they plan to implement a, and I quote, steady dividend increase of 0.25 cents every quarter from FY 2026 to FY 2027. Let me repeat that. A steady dividend increase every single quarter for the next 3 years, assuming their earnings support it, of course. This is a clear, predictable roadmap for income investors. It's management showing extreme confidence in their business. So, with a report this strong, what can we expect from the market? I'd say analysts are going to love this. A big beat on profit and revenue combined with that incredibly clear dividend guidance is a recipe for positive ratings and increased price targets. The market loves a clear story, and SGX just gave them one. All right, let's put on our analyst hats for a second. What does this all boil down to us? I see 3 big takeaways here. First, their multi-asset strategy is a certified winner. They're not just relying on stock market hype anymore. Their derivatives and FX businesses provide a strong, resilient foundation that can perform well even when the stock market is choppy. Second, this company is becoming a dividend powerhouse. Seriously, that 3-year dividend growth plan is a massive signal of strength. It provides a level of predictability that is incredibly valuable for anyone building a long-term income portfolio. And third, they're getting more profitable as they get bigger. Their operating profit margin expanded to over 58%. That's efficiency. It means they're not just growing, they're growing smarter. Now, it can't all be sunshine and rainbows, right? We have to be smart and look at the risks. A major global slowdown would still affect trading volumes, and they always face tough competition from other big exchanges in the region, like Hong Kong. Plus, as a major financial hub, they're always exposed to regulatory and political risks. But even with those risks, the story here is really compelling. SGX is making all the right moves. So, to wrap things up, SGX delivered an absolutely fantastic year. Their core strategy is firing on all cylinders. They're becoming more profitable, and they've laid out an amazing dividend growth plan for shareholders. They are making the transition from a local stock market to a true global financial marketplace. So what do you guys think? Are you impressed by these numbers? Does that dividend plan get you excited? Let me know your thoughts down in the comments. And if you got any value out of this at all, do me a huge favor and hit that like button and subscribe for more deep dives. Thank you for watching, and I'll see you in the next one.